There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechnoTrader. TechnoTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technotrader.com.
Hi everyone, today we're going to talk about trading. I'm sure that a lot of you have visited the internet and all the different sites that are out there that you can find information out about stock trading. And you come across many trading strategies, trading systems, charting software, brokers, gurus, recommendations, chat rooms, and all sorts of things. And it becomes this big mire that you're not sure which direction to go, and you can actually get yourself pretty confused if you try to do a whole lot of things. You need to focus on what your goals are and what your intent is and how you will trade best. And so it doesn't start with strategies. I know that a lot of you do start with strategies, but the problem is that strategies are specific to a market condition and a trading style. And if you don't have your trading style defined before you use the strategy, you could be trading completely against the strategy or against your trading style or just a big mess. So strategies are not where you start. They are certainly part of trading, but they're not the most important part. They're actually the least important part because you don't even need strategies to trade successfully. What you do need is a complete trading process, not a trading system. A trading system is a computer program that a charting software or a broker or another vendor that catered to the retail crowd has created to try to sell you something so that you will think that you can do this and use their product or service and pay for it monthly. A trading system really doesn't work in the retail crowd because most of them are just too rudimentary and the computers that you have are not powerful enough and the formulas are not complex enough to actually do what you need it to do. The most common are red light, green light systems based on MACD or stochastics. Now the problem with that is that these are just wide open to the predators of the market. There are opportunists, and you would want to be an opportunist, taking an opportunity, seeing an opportunity and taking advantage of it. But there are predatory systems out there. HFTs are very predatory. They're maker-takers. In other words, they can offer out inventory to sell or buy, or they can take liquidity. So they can either make liquidity or take liquidity. And liquidity is how many shares are there against supply and demand. So by providing more supply, more liquidity, they offer out more shares to buy or sell depending on whether the market is going up or down. But they're also very predatory, and they know what you're interested in. They know where you go to get your recommendations. They know what websites you check on retail news for the stock market. They know what stocks everybody's talking about on social medias. So they can front run you, and they do it rather easily because your retail broker fills from his inventories, and ergo there can be a certain delay, and the HFTs are trading on the millisecond and you're trading on the minute. So that's something that you have to be very careful of. The professional side has already tried to get rid of floor traders and day traders and everyone else and just use computers. It doesn't work. The problem is that computers are not sophisticated enough and they simply cannot think like a human can think. And ergo, they can't react to the human emotions and reactions as a human can. And they have tried. They have the most expensive quantitative analysts out there, the most brilliant minds in the world, and it still doesn't work. Hedge funds fail all the time because they're trying to use the quant formulas and algorithms to choose what stocks to trade, and it doesn't work. What does work is a high degree of skill at understanding who you're trading with, who you're trading against, and what is around you. And that gives you the direction the stock will take, the momentum or energy behind the move, and how long you should hold it. It gives you tons of information. So a trading system is something that you should probably attempt to avoid because you're going to spend a lot of money and you're going to be very disappointed. I have not heard of anyone yet that has been consistently successful month in and month out, year in and year out, with a trading system of any kind. They have all kinds of pretty colors and shapes and designs, and they have all kinds of fancy black charts. But in the end, the idea is not to have some fancy-dancy trading platform. Final thing that you need to be concerned with is, are you making money or not? And a lot of people say, oh, only 40 or 50% of my trades make money. And I'm saying, are you kidding me? Because no professional would even be able to hold down their job with that kind of success rate. That's horrible. Oh, you can't do better than that. Well, who told you that? Because they're dead wrong. If you think that only half of your trades will be successful, you might as well go do something else. You need to try to achieve at least a 75% success rate and work to get 80 and 90%. This is possible. This idea that you can only have 50% of your trades be successful is ridiculous. And it's based on the fact that a lot of these strategies don't work all the time. Strategies are designed for a specific market condition and a specific trading style. So you need to be careful how you use your strategies. But before you even get to strategies, before you look at trading systems, the first question you should ask yourself is, what is your trading style? There's intraday trading and there's day trading, and they are vastly different. So if you're trying to learn day trading from somebody, ask them the difference between intraday trading and day trading. If they say they're the same, they don't know what they're doing. It's just a great way to test whomever you're working with, because there's a huge difference between day trading and intraday trading. And the rules and regulations for each are quite different. And they should know those differences, and if they don't, then you are working with somebody who doesn't have current information and doesn't know what they're talking about. You have to be very careful because, like anything, there are a lot of scams. And it's not just the stock market. Everywhere you go in life, there can be all kinds of scams and hyped up information and anything you want. You wanted to buy gold? I mean, you can really get scammed that way. So it's not just the stock market. It's just that you have to use common sense. You wouldn't go out and just buy a car from somebody without checking to make sure that it had good tires, that it had been maintained, that it had a good engine, that there was nothing wrong with the engine and everything else. The same is true with anything that you're going to buy, and stocks are purchased that you plan to sell in the future after they've gone up or have increased in value one way or the other. So you need to ask more questions. Most of you don't ask enough questions. Is the company you're working with credentialed? Are they approved by the SEC? That's very important. That separates the training companies who are not really licensed and are not right to teach you, and they probably don't know what they're talking about. So intraday trading is one, day trading is another. Swing trading has many different ways that you can swing trade. There's momentum, there's velocity, standard swing. Swing trading is simply when a stock is running up or down, and you trade both sides of the market. When the market is uptrending, you buy. When the stock market is trending down, then you sell short. And sell short is important. It is necessary to stabilize the markets. Without selling short, the markets will plummet much faster because there's no one to buy the stocks. When someone sells short, they have to buy to cover at some point. And as people want to get out of the market when it's selling down, those sell shorters are buying to cover, so they're buying the stock that other people want to dump. So selling short is not bad for the market. It actually benefits the market, and that's why it is legal in this country. So you have swing trading, and what it is you enter a stock before it starts moving, and usually it's moving with quite a bit of energy. So it's going to move up for anywhere from 1 to about 7 days average. Usually it's 3 to 5 days in these market conditions that we have right now, and that is called a swing trade because you're swinging in and out quickly. Then there's what we call position trading. I'm not talking about positional trading where you take a position, and that's not what I'm talking about at all. I'm talking about taking a position with the dark pools. We've talked about the dark pools, how incredibly important they are. They're massive buying that causes liquidity draws and so on. We've talked about them before. With position trading, you're getting in with the dark pools and you're holding onto that stock for several weeks to a couple of months or longer, and it moves up incrementally. It moves up more slowly. You're holding for a longer period of time, but actually position trading as we teach it is the most popular course that I have, and it also is the most lucrative because you're holding it for a period of time to allow the stock to move up. You're working with the dark pools. You have bought with them, and so you're riding that wave that they create in the upward action. Once they're finished with their accumulation, they let everybody know, and just like retail gurus will buy the stock that they want, then they announce to the world, oh, I bought the stock, or I'm buying the stock. And then, of course, the stock moves up, and everybody goes, oh, isn't he so brilliant? He's such a smart investor. He knows everything. No, he just knows a very good way to get stocks to move. He buys it, and you move it for him. And the same is true of the dark pools. Everybody knows the dark pools are very wise investors. They always buy very low-priced stocks, bargain hunting. And then once they've accumulated all the shares of stock they want to accumulate, they let everybody know they've been accumulating. And, of course, then the smaller funds all rush to buy because the big, huge, giant institutions know what they're doing, and the smaller funds buy emotionally, and the small funds managers buy and buy and buy, and that drives the price up. And also HFTs get in there, and they gap and run the stock up as well. You want to be in with the dark pools, and position trading is a great way. Another reason I like position trading is intraday, day, swing, momentum, velocity. All those are short-term trading, and they require a lot more capital, a lot more time, a higher risk tolerance, and so on. With position trading, you can start with a very small capital base. You don't need to spend more than an hour or two a week studying stocks. You hold for a longer period of time, so you don't have to worry about it. You don't have to be in there every day looking at your stock, wondering if you need to buy it or sell it, because you're going to hold it for a period of time until it reaches a very strong resistance level and then sell it. And a lot of those are really good for people who are just beginning and don't know a lot and are feeling a little uncomfortable or nervous about trading stocks. It's also very good for people who have young families. They don't have a lot of time for stock trading. It's excellent for stay-at-home moms or stay-at-home dads because they can work part-time. They don't have to work full-time on it. It's excellent for people who are building a career but also want to do some stock trading on the side. It's wonderful for retirees because you don't have to spend every day at the computer doing stock trading. You can go and trade a few stocks and then go off and enjoy life as you should as a retiree. So there are a lot of reasons why a lot of people choose position trading, and we're the only company that has a complete course on this type of trading where you actually buy in with the dark pools, ride it up for several weeks to several months, and then exit before the very strong resistance level. It's extremely lucrative, and actually my students who use position trading tend to make a lot more money than day traders or swing traders. So it's a good one. You also have intermediate trading, which is holding for less than a year. Long-term investing, which is very important because you're going to have a retirement, or you want to send a kid to college, you want to help your child pay for their wedding, you want to travel. Whatever you want to do, long-term investing is a very important aspect of it. So those are trading styles. There's also different types of trading instruments. You can trade stocks, but you can also trade what's called an exchange-traded fund, or ETF. There are many kinds of derivatives that are on the stock market now. There's ETPs for commodities, there's ETCs for currencies, there's ETFs, there's ETNs for bonds, so that you literally can trade an index or a fund like you trade a stock. You just have to learn how to do it. Don't go out there and start buying these derivatives that are traded on the stock exchanges on a whim, because there are techniques. There's ways to trade them, and you have to understand what's going on, because it isn't like a stock. It doesn't go up in price or value as other people buy it. It follows the index, so you have to watch that. ETFs are becoming much more popular. ETNs are becoming very popular because it's an alternative to investing in a mutual fund. A mutual fund, you have to hold on to it, and if you want to redeem your money out of it, you have to wait either 30, 60, or 90 days, or sometimes longer. And if the stock market is falling, your value can go down dramatically with a mutual fund. So a lot of people are opting to buy ETFs, exchange-traded funds, which is a type of a mutual fund that's traded like a stock. There's also REITs, which are real estate. And you have a variety of different derivatives. You also have options. Options are on stocks, are stock options that you can trade, but they're on an entirely different market. They're not part of the stock market. The options market is an entirely separate market unto itself. But in order to be a successful options trader, you have to understand how to trade stocks and how to determine how fast they're going to go and how long, because all options are contracts that expire. A lot of people try options. During the 90s, there were so many people trying to trade options. An enormous amount of them lost all their capital. It was really tragic. And to this day, most people who try to trade options because they don't understand stocks, they haven't really studied stocks, they don't know what they're doing, and they follow these ancient strategies. There's like 60-some strategies for options, and most of them are designed for market makers. They were never intended to be used by a retail trader. They're very complex multi-legs. They sound so exotic, and you can't lose any money, but you can't make any money either. And most of the time, people lose their shirts because they don't know how to trade options properly. They don't know how to connect what the stock is doing to the option. Now, derivatives typically make less than the actual stock that you would trade, and that's because it's a derivative. It is derived from another asset class or trading instrument. So there's a lot of things you can do with the stock market and the stock exchange that can bring you money, but you have to have a proper education and understand what you're doing. And all too often, people get all excited and they decide to be do-it-yourselfers. They're going to figure it all out for themselves. They go to a weekend seminar, or they take a 5-day class and they show them how to enter orders into brokers and all of this stuff and sell them a trading system, and then they fail. And that, I think, is tragic, because the retail trader and the retail investor are crucial to the success of the stock market. And when those groups continually lose money, that is not good for the market. Contrary to popular opinion, the stock market is not a casino. It is not the house against you. It is a large, vast group of people all buying and selling stocks. And it can happen where somebody is selling a stock and makes money, and somebody is buying a stock and will make money in a few days. It's not somebody's making money and somebody's losing money. That's not the reality of the stock market. And it's critically important that you understand that, because a lot of people think that if someone is selling and someone is buying, somebody is losing money. And that is not the case most of the time. Most of the time, both sides are making money. Professional traders may be selling to take profit early, and a retail trader may buy, and the next day he makes a little bit of money. Then he sells. A long-term investor decides to buy and holds it for a year, and they make money. So try not to believe all the myths that are out there about the stock market. The first thing you need is to know what your trading style is going to be. Then you need to select a course that has all of the information, a complete knowledge base that will teach you everything you need to know so that you can be consistently successful with that trading style. You have to have a complete trading process. How you analyze stocks, how you find stocks, how you calculate risk, how you calculate your stop losses. Don't use percentages. HFTs will wipe you out. They know those strategies. So you have to have a complete process, and that often can be something that is missing. A lot of times I've had veterans that have been trading for 10, 15, 20, 25 years, and they come to me and they're still not successful, and I'm going, how can you be going for this long and not realize that you need help? that you're just wasting your time and your money, and you could have been successful years ago if you'd had a complete trading process and you'd taken a course that had everything you needed to know about the stock market. Now, let me tell you, we continually update our courses and keep them current with the market structure. New market orders, new trading styles, new candlestick patterns that are forming, new topping formations, new bottoming formations. We are always keeping our courses up to date with the current technologies and what's going on in the stock market right now, and we do it all the time. We have our own production studio, so we're able to do that. If you're taking classes from somebody and the information that they're teaching you is from the 90s or the 2000s, it's outdated, and you will lose money because the market doesn't work that way anymore. The market has changed more in the past decade than in the prior 120 years. It has changed enormously over the last few years. Candlestick patterns are different. How you do your stop losses is different. The different types of order types, the different types of venues, the different market participant groups, it's all different. If you don't understand this stuff, just picking a stock out of a social media nest or some guru's recommendation, you're not going to be successful. You're just not. You might as well not even do it because you're just going to lose your money and then you're going to be very unhappy. And the goal is to make you consistently successful. That's why we're here. We're an educational company. All we do is educate. We don't sell trading systems. We aren't a broker. We don't sell charting software. We don't sell strategies. All we do is teach. And that's what separates us from everyone else. Because almost every other company that you will work with, they're trying to sell you a product or a service. Education is just a means to an end to get you to buy their product or service. TechnoTrader is an educational company, and we are the gold standard in stock market education. No one can compare to what we provide our students in support, guidance, mentoring, and helping them become consistently successful. Check us out, visit our stock courses pages, and talk to one of our advisors on what would make sense for you to start with to become consistently successful as a stock trader. I'm Martha Stokes, and that's our radio show for this week.
There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechnoTrader. TechnoTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technotrader.com.